guys, this is Imran from Options Insight. Due to the incredible interest that I've had from people asking me about crypto options, once I've told them I've become active in the space, I thought it made sense to start making videos about crypto and crypto options specifically. Now, I'm not a blockchain or crypto expert, but what I am is an options expert. And since June, I've been trading Bitcoin and Ethereum options with my own cash, and I've managed to 5x it. I've also managed to do that in a way where my risk was super controlled and I wasn't going to lose a hell of a load of money. So the idea of these videos in this new series, which I'm going to call Crypto Insight, is to talk you guys through some of the strategies and ways that I'm trading crypto options and taking advantage of my knowledge of trading volatility, term structure, skew, and being able to manipulate those positions to give myself some edge and give myself some advantage in the way that I express my views to participate in these crazy wild swings that crypto markets can have. Being a vol trader, I'll tell you now, the most exciting and the most fun assets to trade, volatility, are the ones that know how to move. And right now, there's no other asset class that knows how to move like crypto. So with that, I hope you enjoy this video. Please subscribe to the channel if you like this content, and feel free to sign up for a free trial to Macro Insight, where you'll get this type of content. You'll also get other asset classes, and you'll get live Q&A with me. So I promised I'm going to start talking about crypto in a little bit more detail every week as part of my Crypto Insight. So here we go. So in crypto land, what's going on? So Bitcoin, obviously Bitcoin's been in consolidation mode. I had been flagging that. So the key support levels that I had down for Bitcoin were 31.5, 29.5, 28 actually. And there was also a level down at 25, which I haven't got marked on here. But basically we reached some of these levels. The shape of that consolidation, is now done enough for me to suggest it could be complete. If you look at some of the momentum indicators, on that new low that it made down at 28,700, it didn't manage to eke out any new lows in the momentum indicator. So that was good news. We had quite a violent bounce back up to 35,000, but now we're heading down again. So who knows? We could retest those lows, but for me, 28 is a decent support. Let me bring this chart up. I've actually got my supports marked on here. Okay, so we had potential ABC. Correction could have been complete. If the correction is complete, it just means we're going to start the next charge up towards 50,000. But, today's price action is certainly suggesting it may not be over. Like I say, I like picking it up anywhere near 28. And I'd take another bite of the cherry around 25, basically, right? The way I pick it up is via options. I've already got enough of my long-term sort of Delta 1 allocation. I'm not going to buy more of that stuff. But the volatility came down quite dramatically, right? So Bitcoin implieds were pumped. They were like at 160 for the at the monies. They've come down to about 110. So, 50-point pullback in at the money implies is not bad. And because of the way Bitcoin's bringing around, don't expect it to become an 80 vol asset again anytime soon. I think it's going to remain very, very choppy. And so the vol's going to remain elevated. Yeah. So the regulators are going to go after Bitcoin. Okay. No doubt. Because they don't have an incentive for Bitcoin to become what it's becoming. Right. So think about it. And I'm not saying it's going to happen, right? But if governments lose control of money that they have control of, like that they can print into existence and bail themselves out, if they lose control of that, they're screwed, right? So there's going to be an incentive for them to not let that happen, okay? Now, the question is, at what point do they really, really go full throttle against crypto and stop it, basically, okay? Because, crypto is going to have a struggle. It's going to have a hard time because
these guys can just change the goalposts and make up their own rules, right? Like, you know, they can introduce all sorts of taxes that you're going to have to pay if you're in crypto assets and stuff like that, that might be to do with your mark to market, not even actually crystallizing those gains on those crypto assets, right? So it's going to be tough, but then you've got to remember, because it's so easy to move it across border, it's going to have to be a coordinated worldwide response to go after crypto, because you can just move jurisdiction and you'll be all right. Yeah. And a lot of people are doing that, right? A lot of people are parking their crypto in jurisdictions where they don't think it's going to be messed about with, right? So I don't know how that's going to play out, but right now, I think this year, I don't think that's the story that's going to drive Bitcoin. I think the story that's going to drive Bitcoin is more and more adoption, and more people waking up to the idea that it could be a legitimate asset class, right? That you need to have some exposure to, okay? You know, and a lot of people woke up to that fact last year, but I think those were the early movers, right? And because, you know, a lot of people just don't listen or pay attention until the asset class goes above $1 trillion, or it's in the press every day because it's rallying so much. Then people start listening, right? And even I've noticed it, right? I mean, I talk about markets a lot, but now people are all asking me about crypto a lot more, and because I trade options and I know how to make money in options in crypto, people are asking more and more about it. So that's a sign that people are starting to get more interested. And I think that will continue this year. There's definitely some press on this Tether being a stable coin, and saying that the Tether thing is a whole scam, and they basically issue a load of Tether that isn't backed by dollars. They go into the Bitcoin market and ramp Bitcoin. And then when that price goes up, they sell the Bitcoin back, convert it into real dollars, and then the dollars go and get parked against the money that they printed. And there's this kind of Ponzi scheme going on, right, with Tether. And that story's been going around since 2018. It's not a new story, right? It's just that getting it through the courts and actually, you know, kind of, I don't know whether they're going to be fined or what their consequences are exactly on it. But the point is, the whole ecosystem has had a chance to grow and evolve past all that. So for me, and I'll add a few links. I'll add a link to the article that talks about the scam and the scandal and the fraud, as they want to call it. And I'll also send a link to a Twitter thread that breaks that argument down and talks, and from people who are a bit more knowledgeable in the space, saying why it's probably not, maybe they did do fraudulent stuff before, but because it's been highlighted and flagged for so long, they've kind of likely got their act together and there is some backing to their printing. And actually they're no longer even the main stable coin necessarily. You've got other stable coins that are coming up, like USDC and things like that. So the ecosystem's grown that it's not so dependent on Tether, right? That's the argument. And again, look at the price action, right? Yeah, we're consolidating, but that's because we ripped from like 16,000 to 42,000, right? But it's not like we're just going straight back down on this story. So the market is not, the broader market knows this story. And I don't think that's what's driving this right now. Yeah. So that's Bitcoin. Like I say, I favored the correction is likely over. But like I say, it's got the potential to maybe test 25 at a stretch, at which point, at 25, I'll definitely be allocating a little bit more money into upside stuff. Yeah. But for now, I've nibbled on some upside to February. If we can bounce above towards kind of 38, 40,000, I may sell some higher upside out against that to leg into a call spread, because I suspect on a bounce to 38, 40,000, the upside vol will go really bid and people will start chasing that again. And there was a big guy who owns a lot of January upside calls in the 56, 64 and 72,000 area. They're going to expire on the 29th, right? In a few days. What's he going to do next? Probably by February, right? So when he comes in and buys a load of February calls, what do you think the volatility and the price of those calls is going to do? It's going to go up, and that will hopefully drive the market higher. It will drive vol higher, and it will give me a chance to slot some higher strikes to him, leg into my call spread, and be comfortable with my payoff profile, basically, right? That's kind of how I'm looking at it, and that's my plan in Bitcoin. Yeah. In terms of Ether, that's the other big one. I am only going to focus these crypto insights on Bitcoin and Ether. I'm not really in the altcoin space, and I don't really intend to be. I think these are the two that got the big market cap, they got the big interest, they got the institutional adoption potential. So I'm going to focus on these, and they've got option markets that are tradable as well, right? So the other stuff doesn't really have that. Big thing on Ether is the spread to Bitcoin and Ether. So, you know, I'd mentioned on Twitter that there was no real, even though you had a correction in Bitcoin, there's no correction in that spread. And really the massive level here is getting taken out, right? So you go back, long-term level 0.04 for Ether against Bitcoin. You know, these are levels that Jan 19 and again September last year. So this level got taken out at the weekend. It's kind of pulled back to retest it. So it's taken out the resistance, retesting it. If it holds, then we could be looking at a real March higher for Ethereum, where it could take this spread to 0.05 or even beyond, right? And that is basically a move from 0.04 to 0.05 is a 25% outperformance of Ethereum over Bitcoin, right? So you could see a situation where Bitcoin gets to 50,000 from here and Ethereum outperforms it by 25%. So that ratio goes to 0.05. That would see Ethereum at 2,500, right? So right now Ethereum's at 13 or 1260. So you could look at a doubling of Ethereum, right? So a move in Bitcoin from 31,000 to 50,000 could come with a move from Ethereum to maybe 2,500, right? Something like that. That would get that ratio to 0.05. And that would kind of make sense to me if the whole space is rallying and it's Ethereum and the altcoins are kind of leading the way a little bit, right? Because now that people are in the space and people have probably bought Bitcoin at 10, 12, 15,000 or whatever, and they're looking at it here and saying, okay, how much more can it rally? Maybe it gets to 100,000 this year. That's 3 times my money. But in Ethereum, I've got the potential to maybe make 5 to 10 times my money. And in the altcoins, I've got maybe 20s, 50s, 100 times my money. So there's more money being sucked into the altcoins again, and they may well lead the charge this time. Yeah, you had Bitcoin dominance rising with the Bitcoin rally last year. So see here, this is Bitcoin dominance. So this is Bitcoin market cap as a percentage of crypto market cap. So basically in the rally from November, or even from the summer, from October up, you obviously, this number's going up. I mean, I had this big correction here. I believe that was just Ethereum must have had a big catch up or something. And then again, so Bitcoin dominance got to like 74%, right? Which is massive compared those numbers that we last saw in kind of 2017 and 2019 as well. So quite high levels for this Bitcoin dominance it got to. And then lately, Ethereum's and the alts have come back with a vengeance and taken it back down to 64, right? So, you know, it's showing you that last year was a story of Bitcoin dominance and Bitcoin becoming part of the institutional mindset, maybe, and portfolios. And now the alts are saying, don't forget about us. And that's bringing that dominance back down, right? And that's where your opportunity potentially really does lie in Ethereum above Bitcoin. Yeah. But personally, I wouldn't put all your money in it. I think they both have different use cases. I think it's good to diversify. You know, Ethereum has got a load of apps and you know, things being built on it for the whole DeFi space. Just basically going to, you know, revolutionize a lot of sectors by introducing blockchain into it and smart contracts and all the funky stuff you can do. Whereas Bitcoin's use case is different, right? Bitcoin's use case is we're not really developing it. We're not really changing it. It is what it is. It's a scarce digital asset that people are embracing as a store of value similar to gold to protect you from fiat currency debasement. End of, right? But the cool thing about Bitcoin and what is interesting that makes it different to a lot of commodities is that the demand supply equation is a bit funky, right? So normally with a commodity, when the price of a commodity goes through the roof, right, the people who are buyers of it want to buy less because it's more expensive. So the demand side is impacted by the price. And also, when the price goes up, the producers say, oh, it's so profitable to mine this stuff. Let's go and build more. Let's go and take more out of the ground. Let's go and mine more. So the supply side increases and the demand side decreases, and the price naturally goes back down, right? So there's a natural mechanism to bring the pricing back down. The thing about Bitcoin right now is that the more the price goes up in Bitcoin, the more institutions look at it as a legitimate asset class, the more demand is actually being created, which is quite weird, but that's what's happening, right? So the higher the price of this asset, the more demand people have for it, which is insane, but true in this case, okay? So the demand side is not behaving like a normal commodity, right? And then the supply side, well, you can't mine anymore, right? You are limited in how much you can actually mine, right? And the amount you can mine is dropping every 4 years because because of the halving every 4 years, right? So you don't have this response on the supply side to be able to supply a load more of this stuff, even in the face of a rising price. So that's what makes the price, the dynamics of this commodity, if you want to call it one, I don't know what it is, right? But it's quite compelling in that respect, right? So like I say, I wouldn't put all your money into it. That would be insane. It's a very high volatile thing. Calling it a store of value, I think, is a bit of a stretch when it can drop 50% over a weekend. I don't think you can call something a store of value if it can drop that much so quickly. But do I think of it as a bit of a fiat currency debasement hedge? Yeah, I think so, right? So, you know, I think it's a call option on the future of money. It's a bit of a revolutionary kind of asset. And yes, it could go to zero. So go in with your eyes open, right? Know that it could go to zero, but that's why if you're smart about it, you learn how to trade options and you protect your exposure via deep out of the money options. So if it goes to zero, you actually might make money, right? That's the beauty of it. You can own it. You can do some funky stuff on the downside to actually protect that exposure. That means you can participate in the crazy upside that you see, but you can protect your capital by using optionality. And that's how I play it. And that's how I'm going to continue to play it myself. Yeah.
Thanks so much for watching, guys. If you enjoyed this video, then we'd love to have you join our Macro Insight community. Just visit www.options-insight.com and sign up for your free trial to our live and interactive weekly macro call. If you haven't already done so, please subscribe to our YouTube channel. You'll find more market updates, class highlights from our summer academy, and also video tutorials on anything from options basics to market making fundamentals. You can also connect with me directly. I'm on LinkedIn, Twitter, Facebook, Instagram. You can follow me on any of those platforms. Or alternatively, feel free to send an email to inquiries@options-insight.com.